President-elect Trump is promising to loosen regulations and the regulatory constraints on financial companies, leaving Wall Street CEOs confident in their strong fourth-quarter earnings. Joining me right now, Bank of America CEO Brian Moynihan. Brian, it's good to see you. Thank you so much for joining us.
It's great to be here, Maria.
You had a great quarter, up better than 40% in terms of earnings. What drove the quarter?
The quarter was driven by the hard work the team's been doing for many years. Basically, more loans, more deposits. The trading business did well, and it's just good, solid performance across the board. And as interest rates were raised the year prior, we're starting to see the benefits of that.
So are you seeing the end market customer, loan demand, what do you see on the horizon? Are you seeing some really strong support there? Give us a sense of your expectations for the year ahead.
So let's think about it with two different types of customers, people and companies. And if you think about the people side, the spending by our customers in the fourth quarter was the strongest year-over-year quarter of all the 4 quarters of 2016. Was up 5% plus. The people are spending money, which is good for the U.S. economy because it's so driven by the consumer. And on the commercial side, it was interesting. As you came through the election cycle and the uncertainty who was going to be president and stuff came through, you actually saw borrowing and lines and consumer, small business confidence come up, business confidence come up, and you actually saw some borrowing increase. We'll see how that follows through this quarter, but so far so good.
Yeah, I wanted to talk to you about the middle market. You've got a great vantage point there in terms of business. And business, I feel like in the last several years, has been in a bit of a recession. They're sitting on cash. I wonder if now this idea that Trump policies are going to deregulate, are we going to see small and mid-cap business take things off the shelf, do things that they were thinking about doing over the last 6 years?
Well, when you think about an entrepreneur-owned business, family-owned business, or people start a company that, $300 million in revenue that's involved in global trade and global work, they, for the last few years, have been trying to figure out the world, which has been difficult. The election cycles have been different than people came out, Brexit, whatever. With the clarity that the U.S. is going to be more friendly to them, they are feeling very frisky, as I've said, and they are active. It'll take time for all that to come through the economy, but we feel very good about it. But their attitude was, I need some relief here. I need some people pushing and trying to help me. That's what they tell me, and then now they feel they have it, so they're off and running.
So I know what's gone on at Bank of America. You've really overseen a complete turnaround, certainly from the throes of the financial upset in 2007. Are you feeling better today about the broad backdrop for B of A than you were 1 year ago?
Sure. We're about 80% U.S. and 20% outside the U.S. round numbers.
Yeah.
So when the U.S. is going well, it's good for us. We just earned $18 billion after tax, the second or third highest earning in the history of the company. And we feel very good. The returns are getting up there. But it's not really the hard work, basically one customer at a time doing a great job for them and them adding more to their relationship.
And then there's the stock market. Obviously, we're watching markets rally on this idea that regulations come in, taxes go down. Are things getting a little overheated?
Well, I wouldn't say that because it is what it is. You'd say it's going to be up 60 today to start. So I think about what's behind that, especially the rates of financial services stocks, which have been big movers. A higher rate structure, very good for banking because we've had a zero floor on a lot of our deposits. More economic activity, very good for banking. And then less regulation, or not more regulation. Whatever happens is better than we had before in people's minds, and all that's led to the thing, and we're seeing it come through our stock price as well as our peers, and it's just that view of those things coming together all at once. And generally, we believe the economy at Bank of America, our estimates, the economy is going to grow faster in the U.S. next year than it grew this year.
I love it. So your stock is up, better than 30% since the election. Pretty hot stuff. I want to get your take on this because some of the executives at some of the Wall Street's big banks have actually sold nearly $100 million in stock since the election. The Journal is reporting that insiders are selling. Have you sold since the election?
I get paid in stock, and I have as a stock vest, I have to keep it till a year after I retire. So.
Okay, good stuff. Let me ask you about costs in terms of expenses that you're seeing. I love the fact that when you met with the analyst community, you said you're turning this company into a growth engine. Now, you see organic growth, you're talking about a great backdrop, but you're also seeing expenses come in. Obviously, you've had a real strong eye on expenses. How much more can you take out in terms of expense, considering that regulations are going to come in?
Well, I'd say it's just hard work across the board. So we had about $72 billion in expenses 4 or 5 years ago. We're down to about $50 billion now. We said we could get to $53 billion run rate by the end of this year, going into next year. Very confident in that. And it's just hard work. We had 60 data centers. We now have about 20. We're going to 4 or 5. We've removed a lot of operational process in the company. It's just good, hard work, the kind of work any company can do on itself. They just stop and say, this is what we have to do. And if you think about that year over year, the revenue is up a bit, not 1% or so, but the expenses were down 5%. That kind of operating leverage across our platform and size moved our earnings up and moved our net income up 13%.
Does that give you the ability to pay more in dividends?
It does. We've been increasing our dividend, and we've got to go through the CCAR process in the next few weeks in the second quarter, in the early second quarter, and we'd look to keep pushing the capital return to shareholders as part of the thesis of the company. Each year we've increased it. Now we've got to increase it again.
And when you see where we are today, is a dividend payout to shareholders a better use of cash than perhaps a buyback?
Well, our stock is still trading below our notional book, above our tangible book. It's still a great buy.
Yeah, well, that's what I'm saying. I mean, a lot of people are looking at your stock and some of the other banks, and even though you're looking at a 35% increase, 36% increase since the election, you're still trading at a lower multiple based on your earnings and your earnings expectations of growth than all your peers.
And that's what we're buying it back for, because if people are going to sell it to us based on a lower multiple, take it back all day long.
So you're going to keep buying back that stock.
We announced that we got approval to do an additional $1.8 billion in the first half of this year. So we had $2.5 billion of stock repurchase. You add $1.8 billion to that, we have $4.3 billion to buy in the first 2 quarters of 2017, and then with the new process, we'll go back. What do you